All right. Hey there, everybody. Chris Franks with Texas West Capital coming at you live just a few minutes after 11 a.m. Central Standard Time here on Friday, the 28th of April, 2023. So good to have you guys joining in. I do have Fibo here today. We're trying to get him in here, though. I don't know what's going on at the moment here. So give me just 1 second here, guys. Let's see if I can pull him up here. Let me remove him and see if he comes back now. And so, yeah, we'll try to get him on here. Again, just have a little bit of an issue with the video at the moment. So, man, oh, man, how are you guys doing today? You doing? I see Jake and Play here. Is Hank's here? Who else? Bamboo's here. Good to see you guys checking out. And I'm still getting Fibo, but I'm not getting any video on him. I wonder what's going on with that. He's hiding below the 618. Man, oh man, this craziness, right? So we'll see here. We'll see what goes on here, and see if we can get Fibo to come through. And in the meantime, we'll talk about some other things here, right? So anyway, a little bit of volatility this week, right? So volatility is back. You know, we kind of went sideways. In Bitcoin there from like the, March 18th or so until about April 9th. And then we had a pop up, then a big drop back down. And then we just the other day, we had a pop up and a drop back down, right? And so really kind of crazy. We got a lot of volatility, right? And there's a lot of explanations for this out there. But the reality of it is, guys, this is what happens, right? This is when you're going sideways, you're going to get some volatility. When you get the volatility, it usually, is going to happen around that resistance area, right? And so that's what we're having here. Now, man, oh man, I put out a post recently, yesterday. Kind of some of the other things I've put on there, but just basically saying, these are a couple of things I'm watching. We've got prices sitting, has pulled back to the weekly pivot. It's sitting on this ascending red resistance, which has appeared to turn to support. There is a bit of parabolicness going to the rally, which may or may not turn out to be anything. We had hidden bullish divergence on the daily, which is, it's a bull trend continuation when it plays out, right? And then we also had the Stochh RSI broke out of oversold. And so I put this on there and I said, okay, are we about to see an impulsive rally into 50K? Now, I have got a lot of comments on that. And some of them, some of it, you try to be polite, right? You try to be polite. Even when you do something and somebody comes on, they act like a total douchebag, right? Total douche canoe, right? We could say that, right? And they have no reason to be, right? They've never met you in their life. And first of all, if your initial response to anybody is to try and make fun of them, that generally tells you that you've got something much worse going on in your life. There's something that you're really hurt about. It's an auto defensive mechanism. And then I say something like that. And of course, people are like, oh, no, whatever. And everybody always tries to explain it off, right? But I mean, hey, there's things you learn, when you're learning psychology at a master's level, right? Anyway. So, I mean, again, guys, I always try to keep you guys from doing that. Don't ever step up and just be a total douche canoe online, right? You get nothing out of it. And, for those paying attention, we can see that you're really hurting, right? There's something really hurting you in your personal life. And it's unfortunate. But, the worst thing that you can do is get out there and act like this online where you kind of make a fool of yourself in front of everybody, right? I mean, why would you do that? So anyway, we get a couple of those, and usually the responses with those are very, very, they're usually followed by basic retail misunderstandings, right? Like, for instance, believing that the market and the economy are the same thing, right? They're like, oh no, the economy is going to do this. Well, it may, but when's that going to happen? And even if it does, it doesn't mean the market has to act in a specific way you think it does, right? So, we've got stuff like that going on. People come in, they don't know your history, they don't know you, right? And they assume the thing about social media is everybody assumes that they're at the same level as everybody else. No, you're not, guys. We're not. If there's a doctor on there telling me something and they've got 20 years experience in medicine, guess what? I'm not going to be as intelligent as they are with what they're saying. Now, that doesn't necessarily mean that they're going to be correct. But for me to go up there and say, oh yeah, no, you're an idiot. I mean, how much sense does that make, right? And it's the same thing with anything that somebody has, a successful, education in history in, right? So be careful, guys. Whether you're bullish and somebody's saying something bearish, or you're bearish and somebody's saying something bullish, seek to understand. Ask questions, right? Does that make sense? Let me see here. So Fibo says it says that he's sitting backstage waiting on the host to add him to the show. So we'll add him here in a minute, and we'll see if he shows up, or if you're going to see just a blank screen. We'll find out, right? So anyway, we're going to talk about that chart here in a minute, and we're going to talk about some other things that are going on, the DXY, the typical things, just kind of get a better understanding of what's going on with the markets. But man, oh man, it's a lot of work to post something that gets a little bit of attention. Especially if you're like me and you want to answer legitimate questions, right? And just say, well, listen, this is what I'm thinking here, right? And this is why. And then if you give your response, it's like, okay, yeah, I mean, I can see that, sure. Or, well, here's why I wouldn't necessarily think that's going on. But also, I think the problem is when we put in a chart, and I'll go ahead and throw this up here real quick, guys. This is the chart right here. Okay. And so, are we about to see an impulsive rally of 50K? I think what people, when they read that, because they're very emotional, people are very emotional, I think what they're thinking is, I'm saying, okay, like tomorrow it's going to rally up to 50K, just in one day kind of thing, or 1 week. Not what I'm saying. Not what I'm saying. But again, if you don't ask questions first, you immediately go off emotions, you're going to look silly, right? And then you do it publicly in front of everybody. And maybe you don't care because you're using a fake name and an animal picture, right? That seems to be the big thing on social media. But nonetheless, you still know people are laughing at you, right? I mean, why would you put yourself in that situation? Doesn't make a whole lot of sense. So for those of you who have chosen to be that way rather than ask questions, or even for those who are interested, here's what we're thinking, okay? Again, potential, right? What I found interesting was, again, as I noted in my post on Twitter there, right, was that we have this ascending resistance turn support, right? We had this impulsive candle, large candle spread, large volume breaking out above it, and we've retested the area as support. Now we retested it right here, right above this. This is the weekly pivot, as well as this potential, parabolic curve here, guys. I mean, it's a retest of this multiple supports in this one area. That's the important thing. It's not the parabolic curve, right? It's not just this. It's not just the weekly pivot, right? It's the fact that it's all together there, and then it got a big clip off it, right? We also noticed at that time that we've got this hidden bullish divergence at the same place. Okay, so again, another confluence of factors, right? We also noticed that at the same time, we were getting a bullish cross in oversold on the Stochk RSI, and it broke out. All of this is happening at the same area. That is the point. And I get people like, oh no, hidden bullish divergence. Show me where that's happened before, or oh man, parabolic curve. You're redrawing the line. The great thing about this is I'm not redrawing. You can go there and draw it yourself. All you do is you take your little curve here, right, and you just put it down here, and you pull it up there. See that? Depending wherever you're going to pull it, right? It's right there. It's right there. So, I mean, it's not like you have to say, oh, somebody's in there manipulating you. And then you get the comments from people that say, oh, he's just trying to fill his bags so that he can dump on you when it goes the other way. Are you kidding me? I mean, I don't have that much money that I'm going to make Bitcoin dump, guys. I need you to understand this, okay? But again, the silliness of comments like that is this whole idea that people get online and they speak emotionally. They speak first and think later if they think at all, right? So my warning again is not to be like them. You guys are better than that. You're here listening to me. You're obviously better than that. Don't do that. Don't do that, right? Yeah, I probably shouldn't give. Hank says I shouldn't give the reply guy so much attention. I shouldn't, and I've ignored most of them. There's been a couple, I've tried to respond to, but it's silliness. It is. It's really a wasted time to kind of respond to them. Brian Riley, what's going on, man? He says the trolls will laugh. What'd you say here? The trolls will laugh at 50,000 Bitcoin possibility, but it's not even 2 times from here. Exactly, right? And by the way, guys, in case you're wondering, if you think this isn't possible, that's exactly what everybody was thinking. Let me see here. Back over here, right here. This is 80 somewhat percent rally right here, right? And this area right here looks significantly like where we're at. I've already copied. There was another chart that I posted on there. Let me kind of show you guys here real quick if I remember where the stupid thing is. There it is. So if we do something like this, right? Again, I'm not saying this is what has to happen. I'm saying that when you start going, oh, no, it can't happen, that's the silliness. All through 2019, all those levels, again, I was telling you, no, it's going to break up here because of I was giving you reasons, I was telling you why. And it kept doing it, even though everybody said, oh, no, it has to go the other way, right? But what we're looking at, though, is this right here, right? You see that? Now, it's not going to be exact. You won't get the exact low drop here. And in here, you're getting a rally up, a little bit higher rally up right here. But ultimately, it's just the same thing. And again, that isn't to say that we have to get an 80% rally from here, but to have it happen previously and to show you that it can happen, and then to say, oh, no, it can't possibly happen, you're not really doing it right? So, again, this, if we're going to look at this, again, it's about, especially once you start learning Wyckoff, it's this understanding, and even Elliott wave, right? If you look at corrections, a correction is a correction, but it can look differently. Even an ABC can look different from another ABC, right? A simple correction, simple zigzag, right? But there are multiple other corrections you can have. And all they are in terms of Wyckoff, right, are these redistribution or reaccumulation ranges. That's all they are, right? And so what you need to deduce out of all, or what you need to get to out of all that is the sideways price action is not always going to look exactly the same. Matter of fact, it rarely will. But if you understand what's going on in that area, right, there's a bigger chance that you're going to be able to pop on out there, okay? So anyway, I've kind of got this on there. Man, like I said, it's crazy, guys. I mean, this thing has gotten, I would never have expected this, right? What do we, how many do we have here? Jesus, I can't even tell. Let me just look here real quick and find that. It's just been absolutely crazy. It really is. There we go. Almost 1,350 likes. Jeez, whiz. And 200, almost 300 shares, retweets, and quoted retweets. Absolutely craziness. 238,000 views. So just, I've never had anything like that. So it's kind of crazy. But, again, guys, if you're trading, see, the thing what we notice with that is, first of all, there's going to be some people that are going to like it because they think what it means is, overnight kind of 50,000, okay? Other people are going to like it because, okay, maybe they recognize that I've got, some experience. I've been doing this a really long time, right? And they say, okay, well, he says it's going to happen. I'm not saying it's going to happen. I'm saying there's a setup here that could potentially lead to that, because what happens is you get that breakout above this level here, and this all becomes easy movement, right? Up into almost 40 grand right there, 40,000. And then that sets up a potential move up to that 50, right? If you do Wyckoff, again, Hank has his as well. Wyckoff Analytics, Wyckoff, I can't remember it. What's the other? Wyckoff on crypto. Same thing. Again, those other two, those last two there are the leading Wyckoff companies, right? same kind of understanding. This is accumulation down here. And then I think we'll show Fibo in a minute here. Will show us that his way also has a similar, a rally up higher there, right? Yeah, Todd Butterfield, I think is his name, right? Right, with Wyckoff on crypto. Yeah, so I mean, good people to watch. Got a lot of good information. Wyckoff is not something you're going to learn overnight. It's not something you're going to get good at overnight. It takes a while, and most of the time, it's because you have to train yourself to understand the price action and volume relationship. Just low volume or high volume doesn't mean anything. You have to understand where you're applying it to your price action, and then where you're applying that price action and volume to the correct other areas of price action and volume to get the understanding of where it's leading. So, we've got that. I think it was Wyckoff Analytics or Analysis. They also, it's Roman and Bruce Fraser. And I think there's a Wyckoff P&F count. I haven't had a chance to even do it yet. Coming up there in the upper 40s as well. A target that gets us up there with the P&F. So, Hank says also that Peter Brandt agrees, and so does Mr. Bollinger himself. So, yeah. I mean, it is what it is. So I mean, it's not like I'm just picking this out of nowhere and saying, "Oh, this is what it has to be." Right? Again, if you go through my feed, you'll see I've got Elliott wave count, I've got Wyckoff analysis. I've got a lot of different things I've talked to. I even talked to the macro side of it, right? But at the end of the day, guys, I think the biggest thing to remember, and as we bring on Fibo here in a minute, I think you'll say the same thing, is that the markets and the economy are not the same thing. Okay? It is very important that you understand that. They are divorced from each other. Now, you may get actions in the market that maybe coincide with things that are happening in the economy, but these are two completely different things, which is why you get people for the last year saying, man, we're going into a recession tomorrow for the last year and a half now, and we haven't actually done this thing yet, right? So imagine thinking that all this time, and the market's going up without you. It's a lot of pain, right? Let me see here. Let me kind of bring up Fibo here. Let me see if I can bring him up. Let's see. Can we get him? Oh, Fibo, man. What's up? I don't see you, buddy. What does it say here? Does it say that you're still waiting for me to invite you in? Please don't say that. I'm not sure. And I can't, I don't know that I can even hear Fibo at the moment here. Can you guys hear him? Is he even talking? Oh, I don't hear or see anything with Mr. Fibo here. Okay, guys, so we're going to continue to try and work on that. I'm not sure really what is going on at the moment. We can't even get his chart to show up here. That is some crazy stuff, right? Let me send him another link, guys, okay? Let me send him another link here. And he can try to get in with that. Nope. I'm sorry. Let me get a different link. It gave him the same link. This is craziness. Sorry, Fibo. Let me see what's going on here, man. Make sure your computer is doing right. But you said you can see you on there. That's crazy, right? Yeah. Use that last one I just sent you, that new link there. It's a different link. Let's see if that one works there. Fibo in the Phantom Zone. He is, isn't he? What is the crazy? That's going to suck if we can't get him on here. Only way to practice is online, so take your time. Yeah, no, I appreciate that. Again, first time we've ever actually had this issue, so really not sure what's going in. Give me just 1 second, guys, okay? Let me see if I can figure this out real quick. Let me just kind of pull this up and see if there's anything here real quick to help me with. Because he should have just been able to follow that link and come. Oh, hey! I see him. Look, I'm going to pull him up. Look, he's there. He's there.
Can you hear me? Can you hear me?
Man, I can hear you great. Y'all can hear Mr. Fibo Swanee there, right?
I was just sitting backstage, just listening.
Man, and you sent me that picture. You sent me that image there, and it showed that you could see yourself. I just wasn't coming up on my end, as you saw there, and then I just sent you a new link, so I guess it was just the link. Everybody say hello to Fibo. We all love him, don't we?
What's up?
Good to see you guys all checking us out and everything. I see you guys. Hasta la vista, Barbie, Toby, Silvio, name Mr. Wilkes. Always good to see you guys. Mr. Michael Johnson's here as well. All right, Fibo, man. What do you think? Am I just crazy? Or is there a real possibility we might be seeing some movement up into the mid, upper 40s, maybe even 50,000? What do you think, man?
I guess we might both be crazy because I just recorded with Crown this morning, and
Oh,
my
great.
call.
Do you know when that's going to be out so everybody can check that out?
Yeah, he's gonna upload it probably this afternoon our time, evening his time. So sometime today.
And that's Crown. And then who is that exactly?
Eric Crown. Crown
Okay, guys. So you heard that. So be sure to check that out. Okay.
But during that, I made the call, and this is kind of crazy, but it was a 48 to 50K by the end of June.
Ooh, I like the way that sounds. Anybody else like the way that sounds?
That's the earliest. Of course, timing's always tough, but that's the earliest is the end of June, beginning of July.
Nice.
48 to 50K. But I could show you my chart because I got a lot of confluence that what you're talking about.
Yeah.
That based on what I'm looking at. Let me see if I
Yeah,
can
go ahead, man. Definitely.
let's see here.
I got a question here. When is my show with Scott? Brian Wright would like to know. We're still working on that, guys. I know Scott's over in Consensus. A lot of guys over in Consensus, about an hour and a half away from me right now in Austin. But we will be doing that, guys. And I'll let you know more about that when we get it, okay?
Yeah, one thing I wanted to, when I was listening backstage, you were talking about, confluence and things happening on that, that area that you were marking on your chart. Well, according to my, fib threshold deal,
Can you zoom in a little bit on that so we can see a little bit better?
On the,
on your chart there. Yeah. Just zoom it in a little bit.
Like this?
Yeah. Thank you, sir. I appreciate that.
Yeah. The main thing I'm looking at the moment is, basically when we went into the bull zone right here on the RSI, and we marked the fib at this point, not a spot that most people would set their fib, but that, my whole deal is trying to measure the psychology change. And to me, that was the area that made that change. So that's where I'm starting the fib. So we work our way up and hitting it up on the high here. Took profit because it hit the first target here, which is the 200% extension, which was at 31K, which hit. And now we've retraced back, and my shallow fib, which is that 38.2% level at 27,539, was a buy area for me, based on my threshold theory. So as this came down and hit this area, for me to have a buy signal, and these zones that I follow on the bull and bear zones have not changed in a long time because they've worked really well. And as you can see, the RSI came down here and actually tagged just the bottom of that range and held the bull zone barely, but it held on a daily basis because this is the daily that we're looking at. Mm-hmm. So when the shallow fib is hitting and this holds the bull zone, that is an area of buying for me on my model. So, and that corresponds to what you're talking about in that whole area. And this is a whole different way of looking at it, but it's also another way of seeing that there is some confluence and some buying interest that's coming in at that area. So even if you look at it on the 4 hour, this is a little more confusing, but you need to see back here. This was a bull zone that went into play. And then we went into this boring area of just nothingness for a while, and then it popped back up into a new bull zone. But the interesting thing is even though it went into the bearish zone here, it never settled below this previous shallow fib that's part of my rule. And that 27,230 is that previous shallow fib. And this fib extension zone is also a buy area on the 4 hour, which is also confluence of the area that we're looking at on the daily. So we went into the bull zone. We actually bought down in here, went up, and actually bought again on the new bull zone on the 4 hour. And now we're working, possible targets to the upside. But I just wanted to show that even though I look at it a little differently, I have stuff that is also showing that area as a pretty key area to watch. Now, of course, it could come down and break and go lower because it's a
Right.
market,
Yeah.
but there is a lot of interesting things that are happening at that point in that area, and then moving from there, you can go on to well, not that chart, but um, uh, my weekly this is what I outlined a lot on Crown's show is, and I'll show it to you here real quick. This is just a quick timing chart on the 8 day. I use an
Okay.
8 day for longer term timing for Fibonacci numbers and all that kind of stuff.
Right.
But when you go on the top here, you got the green cycle here. These are the high to highs. So you got the high, and then possibly a high out here. And then down here, you got the low that hit here, and then a low that hit here, and then a low that hit here, and then a possible low out in 2026. But one of the things that I'm looking at here is when we broke this trend line back to the upside, and I took the measurement from the retracement back. So this one actually went up, came back and retraced back to the trend line, and then started taking off. This one actually broke out and never really retraced back and just started taking off. This one actually had a small move up and move down. I think you probably see it better on a week. I don't know if you can see it or not, but there's this trend line right here. This one where you break up and come back down.
Yeah.
So that's what I'm kind of looking at on this one. So what I did was I took it from the retest here and I go 78 bars out to where you have the halving, and then you break all-time highs and then go up. And then if you take 78 bars from this point when it broke the trend line, it broke a new all-time high right here post halving and then went higher. So what I'm looking at here on this is we break the trend line right here. If you go out 78 bars, you don't make a new all-time high until October of next year, and then it rallies up even further later on. And my call for 2025 is 124K, but that's a lot of ifs by then.
Yeah, a lot of things can happen up to that point.
But what I did was I looked at some Fibonacci levels that were in this weekly and then also the daily. And I looked at a timing thing. And I'm not going to go through this. This is just a mess. But we had a 54% run here. And I looked at a whole bunch of different timings and different time frames. And if this actually breaks out and we get back above this, the timing of this brings the end of June, but beginning of July to get to at least 48K, with a possibility all the way up to 50K. So that's where my 48 to 50K kind of comes from on this kind of maybe a possible parabolic type move. I mean, we just had a 54% move and we consolidated in here. And if we break out again, why couldn't we have another 54% move? We could. I'm not saying it will happen, but the setup, like what you're saying, we're all about finding setups and putting in orders where there's setup possibilities and the probabilities are better for movements to the upside, those kind of things. Yeah. So when you look at it from a confluence perspective, from the way you look at it and the way I look at it and the way the Wyckoff guys are looking at it, there's a lot of stuff going on that I feel confident staying long the market, even though we've rallied up a lot since the bottom. And of course, we're not in that bull trap that we've been in for 100% move, but I'm looking for setups just like you are. And it was interesting that my confluence just matched up exactly what you were talking about on the top of the show. So
I think it's great. I mean, I think it's great that you bring that up there. With all that confluence being the same there. See if I can get this over here with us, because again, the one thing that I've really been intent on making sure traders understand, those that want to be traders, is that there is no one specific way out there that works and it works better than, and everything else just kind of suffers. What it is most traders come in and they don't actually take the time and effort to learn something completely and correctly, and then take the time it takes experience, right? So what I usually tell traders is you should expect to spend probably 6 to 8 months practicing correctly, not just practicing incorrectly, but practicing how to do whatever system or style it is that you're doing consistently, just to get a feel for whether that's something that really resonates with you or not. Because we know that when you go into school, some people take to mathematics really easily. and they have trouble with maybe like English or something like that. And other people are like, well, no, English is my thing. I don't really have a lot of, math is just kind of just doesn't really get me.
Hmm.
And I think it's the same way in trading. I think, there's all these different ways to look at the market. Nothing is necessarily all that much better than the other. It's just, does it work for you? Because it does
Hmm.
work. I mean, that's why these things are still here decades later, right? Because it still works. It's just, are you doing what you have to do to be successful with it? Would you agree with
Yep.
that?
Oh, absolutely. And the main thing is when I'm doing all of my stuff on the using fibs and my model and everything, I'm definitely not saying that that's the only way to look at a market. I like to look at it as um, I'm kind of a team player, and we're on a team together. And I'm just kind of showing you what I'm seeing, and you can take that advice. And what I hope you do is one, kind of learn what I'm doing, but don't take it like as this is the model of all models. Take it as an input into what your strategies
Yeah.
are and what your risk management program is, and if
Yeah.
it's advice that helps you in determining when to buy, when to sell based on your risk tolerance and whatever strategies you have in place, that's what I'm here for, is to help advise that these are setups. This is an area of a setup. Does it make sense for you to go long here based on your program or based on your risk management? Then here's another way of looking at it. If it makes sense to you and it gives you and it makes you comfortable, then that's the way I kind of look at it. It's not like don't take my model and just run with it and try to you know
Blindly
use it
just follow
exactly,
along.
because I mean I can show you how to use it, but there is that experience and
Yeah.
subjectivity part of it that is hard to teach. But over time you start to click on things and like,
Yeah.
okay, I see what you're saying here and I see what you're saying here, that kind of thing. So that's the way I kind of look at it. As I'm a team player, just kind of like a co-pilot, and we're
Yeah.
flying together, and you might be doing one thing and I'm doing another, but we're going to keep the plane going, and not crash down,
That's nice.
that kind
Yeah.
of thing. So that's the way I kind of look at it.
Yeah, I hope
Just
you
kind of.
guys are paying attention to what Fibo's saying there. I mean, again, guys, same thing I push all the time, and so, we've both been doing this, for a few decades here, and, it tends to work out successfully for us, which is why we're still doing it for a few decades later. And
We
so,
got a little
I
bit of
think,
gray here and there,
yeah, right.
and each gray is probably a loss that we took, that kind of thing.
But guys, so especially if you haven't come up on that system of trading yet that gives you consistent profits, just take a lot of what we're saying, to heart here, in understanding, because I think a lot of traders, when they come in, they limit themselves to how successful they can be based on their emotional ties to whatever they think. Again, I always come back to the, do you want to be profitable or do you want to be correct? The correct answer is always, you want to be profitable. If you
Hmm.
can happen to be correct along the way, hey, great. But if you're really, determined to just be correct, no matter what's going on, then you're going to lose money more times than not, guys. We are, by design, we are inherently fallible beings, guys. We're going to make mistakes. Our brains are not that powerful that we can, figure out every decision in the decision tree for 100 years out, right? So we have to do the best with what we have. And when it comes to markets, no matter what you're learning to get in there, you are going to find out that if you're practicing something correctly, over time you will become better and better at it, because along with that, as Fibo was saying here, you get, just by being in the market, just by being in there for a long period of time, you start gaining a better feeling for how things are happening in relation to whatever model or system that you're using. Because each market, the market is a living thing, guys. Remember, it's just a visual representation of this movement between fear and greed in the aggregate. That's all it really is. It's a visualization of what that social mood is at any time in that point. And so
Yep.
again, if you're trying to trade news, you're always going to find yourself behind the eight ball. If you learn to understand it from the other way, that social mood leads to what you see on the charts, which then has things happening which we afterward associate with news. If you can start learning it that way, the market becomes a lot more clear. It still doesn't mean you're always going to get it correct, guys. You can do this for 100 years, you won't always get it correct.
Yeah,
So
I like to use the analogy of of a doctor that looks at an EKG. Like if you get an EKG and you look at your heartbeat, I look at some of these indicators like the RSI or the ADX or whatever you're looking at is kind of that heartbeat of the market. And if you're someone that's been practicing medicine for 20 years, or like you talked about earlier, um, I'm gonna see the heartbeat of the market here based on the indicators and based on my models, and I get to know how the market psychology is working over time.
Yeah.
But if there's something wrong with your heart and the doctor sees the EKG making something different than it has in the past, it's a red flag to say we need to dig in here and figure out what's going on.
Right.
And I look at the indicators the same way. If like for instance, if that would have broken to the bear zone on my daily, I would be okay. Let's dig a little deeper because maybe this thing's going to start correcting back really hard. But it held, and it did the same thing it's been doing in the past. So right now the heart rate is still working really well. So in other words, the support and resistance levels are finding the buyers where they should be, finding the sellers where they should be, and going forward from there. So that's the kind of analogy that I like to look at. But like you said,
Yeah.
it takes an experience to understand what you're looking at,
Yeah.
to know when those problems are arising and when setups happen and when setups don't happen. That's where the experience part comes from.
Yeah.
You can learn the math. It's that experience part that takes a little bit more time. And that's what you're saying, 8-9 months. It takes a while to kind of get a gist for what's going on and how to read certain things.
Well, I mean, we can even think about driving, right? I mean, when you first learn to drive, you can read everything and understand how it works, right? And you understand that you push the brake pedal and it makes you stop, and you push the gas pedal and it makes you go.
Yep.
But until you actually get in there and do it, at first it's really herky jerky, right? Especially if you're trying to learn to drive on a standard. And oh my gosh, I know a lot of you guys are young and you have no clue what a standard is. Everything's an automatic today. But you used to have to manually change your gears in a vehicle. And so, myself, Fibo, Hank, we all know about this. But, even just getting with an automatic, again, it takes a while of driving to understand. And new cars, right? Each car is different. How hard does the brake grab? How quickly does it grab? How much response do you get from the gas pedal? If you've got a larger engine versus a smaller engine, do you have an electric versus, whatever, and all these things, it takes you a little bit of practicing with that vehicle to kind of get used to it. So just another way of thinking about it. But let me ask you this, Fibo, what is your favorite chart right now? What is the one that you're kind of liking a lot? I mean, obviously, other than Bitcoin.
Other than Bitcoin?
Other than Bitcoin. Any market, anything.
It's been kind of quiet for me on a lot of stuff. The one that I'm really kind of following is the DXY on the daily. I'm still very bearish overall.
Mm-hmm.
There might be, like on the 4 hour, it might go bullish a little bit here in the near term, and we'll just get those whipsaws and stuff. But I'm still looking at. I still got a target of under 100 at 99.28. Still my target to the downside on the daily. It's up at the shallow fib, so it's at an area where I'm actually, it's a shorting opportunity.
Mm-hmm.
That's still continuing because we've been in the bear zone since the March 22nd, and we've been kind of on the downside from that point. To where I still got a target of 99. So that's one of them I've been kind of really kind of following, because I'm also wanting, if the day, not that there's 100% correlation by any means, and it always can break down.
Right.
But if the dollar is still going to remain bearish on a daily time frame, and I still have targets of under 100, at that 99.28 level, which is a 200% extension to the downside,
Yeah.
then to me, when my daily holds support at the bull zone on Bitcoin, and it's right there on the shallow fib as a buying interest area, and I'm at the shallow fib on a selling interest area on the dollar. To me, that helps look at the overall picture for me, that if the dollar continues down, then maybe some of that money will go to those riskier assets. I not it's 100%, but
Right.
I like being short longer term on the day on the DXY and being long on Bitcoin at the moment, because the way my models are showing, that's the way that it's playing out. And I can hopefully see 99.28 on the dollar hitting around that June timeframe, just like 50K might be hitting BTC in that June timeframe. I know it's slightly aggressive, but timing wise, that is a possibility, and I'm gonna kind of keep my eye open on it.
Yeah, no, I like it. Again, anybody's been following me along here. I keep this head and shoulders up here because this is what everybody's kind of looking at. But the reality is, for me, again, the reality is this rejection, this initial rejection here at the weekly pivot back there at the beginning of January, and then the rejection again here
What
at the
price
beginning
level
of
is that?
March. Where the weekly pivot is.
Yeah, I can't see the number.
That's 104.3, right around
Okay,
104.3, 104.32.
Okay, cool.
Yeah. Now the rejection up here is closer to around 105.9
Yep.
or so, 105.8,
Yep,
somewhere
gotcha.
around up there. But again, we dropped down below it, rejected, came down, popped up, just peaked out above it, rejected again, and here we are, right back down to this same support area from back here in May of the week of May 30th of 2022. I mean, we popped down there. Here we're coming lower. Here we're coming again. I mean, it seems like there's a lot of pressure pushing to the downside. We have just kind of gotten into oversold here on the Stochk RSI. RSI still remains above oversold. And so, again, I think that, man, even if we get a bit of a bump here, I think, I think this weekly pivot area continues to hold. And we ultimately look and, head on down here toward that, 93 and some change, getting you down here to the S1 on the weekly pivot. I don't see a whole lot else going in there. I mean, yeah, we're at this support. So,
it hasn't confirmed yet, is what you're saying.
You go, okay, well, there's maybe
right?
a double bottom there, but
the head and shoulders hasn't confirmed yet because you need to break that neckline, correct? Yeah.
Right, exactly. It's got to break down through that through this neckline here.
And the same thing on mine. If you throw mine up real quick, I'll show you what I'm saying. Like,
yeah, I'm gonna put yours up there.
I'm on the same boat because I like that we're at the shallow fib and there's still possibilities to the downside here. But also this fib extension target, this 101.22, I need to see 3 consecutive daily settlements underneath this to confirm. Just like on your head and shoulders, you need that confirmation. Yeah. Now we had one and then it closed back up and then we had some wicks. But I need 3 consecutive daily settles, and once that's confirmed, then the 200% becomes almost a really high probability of hitting if we get 3 settles underneath that 101.22. So I'm not confirmed yet.
And where's that 200
just like your head and shoulders pattern is not confirmed. But if it does happen, that confirmation is going to give us a nice downside.
Yeah, where's that 200% target on yours?
99.28. Yeah, that's just the target off of this fib extension target. The next one I'd have to look back, but it could be down like in the 80s below that.
Yeah, locally, I mean, for those that are in Discord with us there, that get those daily and intraday updates, I've got like I think it's a 99.38 or something like that, somewhere right around there. So that you said 99.2, you're like right there with me. So yeah, I like the target.
It's still there, but the way I do like it is it's still in my bear zone. The bears still have slight momentum. So if they do end up pushing through, there'll be a lot of stops. There'll be a lot of selling interest, and I think it can pop us down to that target pretty quick.
Yeah, I mean, and again, I wouldn't be upset about that. Again, back there the first week of January when everybody was swearing, that the dollar had to go, DXY had to go lower, I was saying, no, I think it's probably in there. And at the time, the market was really offsides. It was something like 94, 95% bearish at that point. I mean, so coming out there, it was a great confluence area with that. And at that time gave that 114, 115 target. So we hit that. And so that's been fantastic. That was 2 years later, we finally hit that target. So I wouldn't, my feelings would not be hurt if we were to continue to go lower and give me a little bit more clout for that. But yeah, let me see here. I've got some gold here. I'm still looking at gold, man. Let let me see here what I got. I've still got this. We haven't really done. Let me kind of get this, I guess, a little bit bigger here. We still really haven't moved out of that initial pullback yet. So, with the pullback here, we got this breakout up toward the, slightly lower high right there. That's the R1 pivot on the weekly. We got rejected right there. We've pulled back just to kind of this resistance area right around the, if I pull from the swing high here to this, potential wave 4 here. So basically measuring out wave 4, we've pulled back to the 23.6 right now. That's kind of where we're sitting now. Again, on the weekly here, we're well overbought. Well, we're overbought. We're about to dip out of overbought. RSI hasn't quite hit overbought yet. But I want to warn traders that, yes, you want to look for a reversal when you're getting overbought, but it can stay overbought for an extended period of time. Same thing with oversold, right? So you guys have to understand that, yes, when you get to those areas, you want to look, you want to be watching for. I think that's probably the best way to say it. Don't assume that just because it gets there that you immediately have to have some sort of reversal. Once you enter into that overbought zone, what it tells you is that the bullish trend is really strong. That's what it's telling you when it gets to overbought. Now, at some point, you're going to get a reversal, but that doesn't mean it happens right away. And I think a lot of traders, when they're using momentum oscillators, they get kind of stuck in that. They think, oh my God, you hit overbought, so it has to immediately turn back down. And no, sometimes it might, but a lot of times it's going to stay overbought for a while. And so your job, once it's getting to overbought there, if you're looking for it, is to actually look for a reversal. Look for a reason to find a reversal, but don't expect it to reverse right away. And again, same thing when it gets down to the oversold area. So if I'm looking at gold right now, we're still, it still could very well be, complete as it is here. But there's also the possibility this could maybe be an ending diagonal here. And we've got like a 1, 2, 3, 4. And, we might even, I don't know, let me see here. We might even tap out to a slightly higher all-time high there, right around 21.15 to get on that. But ultimately, the idea is we would pull back down toward, depending on where we actually, if we get reversal here a little bit back up, coming down here toward this weekly pivot, and then look for that third wave out. And that third wave is going to be up here at least around 25.75. And if we look at this descending wedge here, the pattern target is about, what is that there? $572.60 or so above the point of breakout. So that gets us kind of around the initial wave 3 target area, at least as far as I'm looking at it there. Do you have a gold chart?
Yeah, I'm actually long a little bit of gold. There. Yeah, I'm long gold at basically my shallow fib level. Went into the bull zone here on the daily, went up, consolidated, went up a little bit higher. Took profit on this first move here because this first level of basically when I bought in here, took profit, came back down, and now I'm back long again at the shallow fib. In the bull zone, momentum right now is not great, so it's more like sideways. Might consolidate a little bit around here. But my next target's 21.39 based on those levels. So not that it's going to be there tomorrow, but right now we're finding buying interest and support at the shallow fib. We're still well into the bull zone, but not a lot of momentum on the ADX since it's falling. Both directional index lines are all mixed up. So to me, just a little bit more consolidation. So we could probably be sideways for a while. But as long as this shallow fib holds and support holds and the bull zone holds, we should have another leg up. And I'm long there, anticipating that move.
Yeah, like I said, that kind of aligns with within a few dollars of what I'm looking at there if we get this breakout higher. So once again, guys, just seeing that that you can get these same targets. Price tends to gravitate toward the same areas. It doesn't matter what system you're using to look at it, as long as you're doing the system correctly. So again, I keep doing this. I'm just such a big, because I tend to use, I've got a lot of experience, so I'll pull in a lot of things. But generally, Elliott Wave and Wyckoff with some price action kind of thrown in there. But just because I do that and it's really successful for me doesn't mean you're going to get that same level of success out of it. So the idea is to, pay attention to other people, right? Find people who are looking at different ways of looking at the charts and find the one that really resonates with you. And once you find that, then prepare to spend 6 to 8 months but make sure you learn it correctly. You're not half-assing it. You're not just kind of screwing around. Make sure you're really learning it. Make sure you're really applying it consistently, practicing correctly for the next 6 to 8 months. And then kind of at that point, then you kind of say, okay, is this something that I think is going to work for me or not? And it may not be, guys, and you may have to start over again. But I think you need to get out of the whole idea that, I'm getting in trading today because I can, and I'm going to be rich tomorrow kind of thing. You need to think of trading as a skill set, as something that you learn and you get better at over time. And then the other thing again is, guys, um, concentrate most on the system that you're using itself. If you look at every trade as how much profit am I make, how much money am I going to make, you're going to do yourself a strong disservice when you're trying to actually make it work. You need to be concentrated on the system. If the system works, your profits are going to come. But even if you got a system that works, if you're just focused on just the profits every single trade is an individual trade, you're going to find that you're going to have a lot more difficulty becoming consistently profitable with that. So,
I
again,
completely agree.
What was that?
I completely agree.
Yeah, see, guys,
because like my system, I mean, it isn't like I came up with this thing in a week. It took years to find the right method. Not that you can't learn the method quicker, but it takes a long time to figure out what in the heck's going on. What I did was I didn't even really care about price. I was more along the lines of trying to find those psychological changes in the market. So when I would find signals and stuff, I would actually write down, and I know this is old school, but I would kind of journal like my emotions of what's happening right now. How am I feeling at this point in time? What's happening in these certain indicators while this is happening in my brain? And then I would go. It took a long time to kind of figure it out. But beyond that, I mean, like you said, it takes a long time to really dig in and understand how any type of method or program or whatever you're looking at, how it actually works. But then it takes that experience to really make it work for you.
Exactly.
And it doesn't have to be mirrored. So what I'm hoping that somebody takes the threshold theory, rips it apart, makes their own thing even 10 times better.
Yes,
that's
yes.
the goal. That's the goal, because I found something that I felt like was simplistic for people to understand. I'm using pretty easy indicators, RSI, ADX. I mean, they can be difficult in times, but it's more along the lines of simplicity, but actually has some benefit to it. So you don't have to have all these crazy indicators. One thing I like about your stuff is pivot points. I mean, those aren't rocket science.
Yeah.
But once you learn and understand why they do what they do and the psychology behind what they do, then you start to realize, okay, I understand how this works. But it takes time to figure that out. I mean, I'm rambling, but go ahead.
And you guys notice what Fibo said there. He said when he was putting this together and kind of getting it all together, he was journaling. He was writing down what was in his head at the time, what emotions he was feeling, why he was looking at these indicators, what they were telling him at that time. He didn't say, hey, I came back later and did it, because once you're out of the moment, you're going to see things differently, guys.
Yeah.
I tell new traders all the time, or those that are just kind of get into a bad series of trades, start journaling and journal at the moment that you're doing it. Because when you look back, when you're out of the moment and you look back, most of the time, just in cases of where you've got this series of bad trades going on, you're going to look back and you're going to go, oh, yeah, I see. I was being very emotional. I would never have taken this trade.
Yeah, there's plenty of times where, if you truly are honest with yourself and you go into enter the market and you actually journal what you're actually feeling and thinking at that time, you have to be honest with yourself. Are you really buying because you read something on Twitter that everyone else thinks it's going to go up from here? If that's the case, journal that, and make sure that you're not doing that in the future, because you're going to notice that if you keep doing that over time and you go back over a year's notes of journaling, you're going to see that, well, maybe I shouldn't listen to those news items that are coming out. Maybe I should focus a little bit more on this or whatever. And you'll just like finding patterns in the market and finding ways of finding buying and selling. It's the same in journaling. You go back, you can actually journal chart your journaling, and basically say, okay, here's the times that I did really well with these emotions. These emotions aren't, whatever it is and how you journal, but you could actually go back and kind of put an indicator on your emotions and see what's working, what's not.
Yeah, and it's great.
It's weird, but I mean, it's a way of doing it.
Well, people are doing it all the time, right? They put Kramer on there, right? Every time Kramer says something, it seems like things fall, right? So you got charts of Kramer just posting all these things. Same idea, guys. Just do that. Toby here saying that our pivots points course that we released just the other week says very good. Glad I bought it. Still learning. Martin here agreeing the same thing. We're actually going to put that back to sale. We're going to sell it again here pretty soon, so be watching for that. By the way, real quick, before we go any further here, I did make a mention on Twitter that I've got a 52-week program. So basically, it's teaching you one thing a week for 52 weeks. It will be completely free. So be watching for that. I'll mention it across social media as soon as we get it done. I was hoping to have it ready last night. It looks like it'll be today sometime. But I'll put a link on there. Again, guys, it'll be completely free. And you'll get one thing every week. It'll be short. But just something to help you, especially if you're a newer trader, or if you're just a trader that's not really consistent, to help you maybe understand some of the technical things that are going on with trading that you might be using or maybe haven't even been exposed to yet. Again, guys, it's all about finding those things that work for you. Some people it's momentum indicators, other people it's candlestick patterns, other people it's whatever it happens to be. Nobody is 100, nobody's right because they like something and not something else. Nobody's wrong because they like something, not something else, guys. Trading is all about you. That's it. It's not about me. It's not about Fibo. It's not about anybody else out there. It is about you. It is your journey. Okay? So you have to figure out what works best in your journey to get you where you want to go, not what somebody else tells you should be doing. Other than risk management. Always risk management number one. Okay?
I still have a buddy that trades off point and figure charts. And that's all he uses. Yeah. It's all he uses and still trades with it today. And I'm like, crazy, man. But if it worked for him, then you go with it.
I love it myself. Again, I tend to approach point and figure more from the Wyckoff way of counting rather than just the normal point and figure. But and that's another thing, guys. If you haven't done that yet, there's a lot to know on point and figure. It's a completely different way. It's a bunch of X's and O's on your screen rather than your candlesticks or your Renko or anything like that. But
well, it takes time out of it. It's more along the lines of change.
Exactly. And so it's a great thing. Again, I told you that Wyckoff Analytics, I believe, is the company there with Mr. Frazier and Roman there. I can say Frazier, but I can't say Roman's last name. But anyway. Again, the point and figure target they have based on the current Bitcoin, the idea that there was accumulation, everything is in the upper 40s there. I think it was somewhere around 47 or 49,000. And by the way, those point and figure targets can get added onto, especially when you're doing Wyckoff as you get to the reaccumulation ranges on the way up. So, minimum kind of area that we're looking for, right? Kimosabi, he says he does appreciate you and myself here along his trading journey. We do appreciate that. Hank says, do you want me to do a session? Do I want him to do a session on the 12-hour stochastic? Hey, man, you know what? Remind me. Send me a DM to remind me there on Twitter. Maybe we can do something there, man. Let me see here. So we've got kind of that. I've got this other, I guess we'll look here at Ethereum and Ethereum Bitcoin. I've got some charts on here. These are the same things we kind of been looking at. So, again, we have this. We'll pull up this one first. This is the Ethereum Bitcoin. Remember, this is the weekly chart, guys, and this range. I want to remind you, we've been in this range here. I get it over there now for 714 days, guys. 714 days. That is almost 2 years that we've kind of be there, right? That we've been there, and so the most important things to understand from that. Is that volume's been tapering off the entire way, other than the spike of volume down here on this breakdown, this little spring area here, right? Retest coming in at much lower lows. That's what we want to see. We rally back up to the top, which we would expect. We've come back down. Again, this level right here, this red line right around 0.06233 seems to be holding as support through here. As you can see, we got this rally off here. Now, we're looking at the possibility. We haven't quite hit the 61.8 retracement. We're looking at the idea we've got a 1, 2, 3, 4, 5 up here. And then right now, maybe we've got an ABC down for a W, and then we've got a triangle, and then maybe an ABC here for Y, or this could be an A and then a flat as a B, and we'll get a little bit further down here, maybe the 61.8 or the 70.5. 61.8 is at 0.060744. 70.5 is there at 0.057868. Those would be my targets I watch for. Obviously, we could still hit potentially 78.6, which is right around 0.555313. But the idea being that this is still appears to be corrective. It's a bunch of overlap. It's a bunch of overlapping candles, smaller candles. Volume overall is dropped off, even though we had this one kind of this wave B, this drop down and rally right back up right off the EQ area. But overall, volume has continued to drop off. It is kind of picking up. Again, though, you can see it right here in this area where it's picking up. So usually that kind of happens around a low. So we'll want to see if this current low holds or if we drop to one of those lower lows. I had some questions recently about, I think the last time I did this, how could I have the Ethereum Bitcoin chart going up if I expect that Bitcoin's going to rally pretty good as well? So remember, guys, Ethereum can gain ground against Bitcoin multiple ways, right? The first one, and the one most people think is, okay, Bitcoin drops and Ethereum goes up, right? But you can also have both Bitcoin and Ethereum rallying, right? And Ethereum just rallying more than Bitcoin. You can also have Bitcoin and Ethereum both dropping and Bitcoin's just dropping faster than Ethereum. That doesn't really ever happen though, right? But nonetheless, I mean, in all those different scenarios, you would see the Ethereum versus Bitcoin, you would see it rallying. So, that is possible. But again, until we're breaking out above this wave X resistance here, again, I told you this before, this is that 0.073544 level right here. Until we break out about that, we can still kind of continue following down. We break out about that, that should confirm that wave 2 is complete. And wave 3's got a minimum expected target up there at 0.120893. So however soon that happens, I don't know. But let's face it, guys, we've been going sideways for 2 years. And so the longer you consolidate, the longer you go sideways, the bigger your breakout or breakdown. The more impulsive it is, the further it goes. So 2 years is a long time of sideways. And so there we go, right? Let me see here. Andrew, what's up, man? Yeah, we went over Bitcoin, man. Me and Fibo both, man. Hank says, oh, yeah, that did happen where Ethereum, where Bitcoin, I guess, went down faster than Ethereum. He says last time, in fact, that is why Ethereum doesn't have a lower low. Okay, so there you go. It did happen, guys. Let me see here. So we've got that, and then we can look here real quick at actually at the Ethereum chart, right? So this is another chart I posted there on Twitter, right? And so basically, what did I do? So again, somebody said, well, you did Bitcoin there. Let's take a look at Ethereum. And so this is kind of what I did. And you'll notice there's a lot of similarity here between Ethereum and Bitcoin, right? The only thing that's different is that the pivot on Ethereum is not right below. It's sitting right above. But we do have the same ascending red support. We do have the parabola. We've got a bit of hidden bullish divergence here. Stochastic RSI is not oversold, but, again, the structure here is different. Again, remember, Ethereum made its low here in June of last year, and then the November made a higher low, whereas Bitcoin, we made a lower low in November. Now, personally, right now, I'm looking at this as a 1-2. And so, this could see us really kind of rallying up there. This right here is the pull off of this right here. Okay. And generally, same kind of idea. And what does that mean? It doesn't mean, it's not a big thing that this went a little bit lower last time here than it did this time, right? What you're looking at is that was a 1-2 last time, right? Again, you're looking at structure, accumulation. Again, in this area, you can see volume dropping off. You see volume picks up on the swing low, which prints a higher low. You see that? as we're getting up to resistance here, you can see how volume continued to drop off. It picks up again right here on the swing low, this pin bar candle right here, and then the big candle right after now. Again, so demand showing up at the lows, not at the highs, right? This is accumulation, guys. And so again, that was last time. I just posted there to show them, listen, there is, in case you're thinking this has to go down lower. Again, I think it seems like for most people, it is, it looks like we lost Fibo there. Well, we'll see if he can jump back in. We'll see if he can jump back in. These are having a whole bunch of issues for some reason today. I won't ask you today how you guys like Restream, what I'm doing here better than what I normally do. So let me go ahead and give Fibo a different one more link here to get him in. And then that way we'll do that and see if that works for him. I don't know what's going on today. But there's a different link sent to him, so we'll see. But yeah, so yeah, again, guys, I get a lot of people who come in. Fibo, come back, Errol Quinn says. A lot of people are coming in, and there's still, again, you have this long-term downtrend, in Bitcoin and Ethereum, and you can't help but feel bearish. And then you watch other people online who have big followings talking about how bearish they are, right? And so yeah, it's kind of difficult, right? But it is what it is. You have to recognize that, guys, and you have to then go back. And this is where it comes out to, well, do you really have the education or the experience that you think you have in markets, right? If you're, hopefully me talking about these Wyckoff and the accumulation range and how things are going in there, hopefully you guys are really catching on with the importance of maybe learning something about it at least, right? But also understanding that you can't just throw up a schematic and go, oh my God, yeah, that's what's going on. Schematics, the whole, and again, if somebody's doing that, they haven't really studied it because they would have learned that schematics that they use were just there to help you understand. They weren't there to say, oh, this is what it's going to look like, right? Man, oh man, it looks like Restream's giving Fibo difficulty here. So I'm not sure he's going to be able to get back in here, guys. I do apologize for that. I don't know what the heck's going on here. I'm going to send him one more link. And we'll see if we can get him in. And then if not, I guess, unfortunately, he's going to be out there. It looks like the software, for some reason, is just giving him this spinning circle thing. I don't know. Let me get him let me tell him to reload his browser. But man, it's hard. It's hard, right? When you're trying to do something and the technology does not work with you, right? So we'll see if we can get him back in here. If not, we'll have to bring him on again next time, guys. Unfortunately, I do apologize for that. But yeah, as far as Ethereum goes, I mean, we got a lot of similarities to what we're kind of looking at, macro wise, in terms of support and, the way price action is played out. But, again, like Bitcoin, we want to see an impulsive breakout higher, right? And if we don't see it, we go back and we change, right? But I think, honestly, at this point, guys, with the rallies that we've had over the length of time, again, Ethereum has been rallying for since last June, right? So Ethereum, if we look at this, had a downtrend of 217 days. So an extended downtrend, right? But we've been rallying now for 315 days. So again, guys, if that's, if you see that and you're still thinking, oh, bearish, yes, it could still go down. But again, as a trader, you should be looking at probabilities. What's more likely to happen? And with that kind of time and rally behind you, again, it's rallied what? Let's see if I can find it here. We've rallied 100, almost 150%, right? 140 somewhat percent over the course of, again, 315 days. That's not a bear market, guys. That's not a bear market rally. That is generally understood to be a bull market, a bull rally, okay? Again, and I get a lot of people want to argue this, go, oh, but Bitcoin's different. No, it's not different, guys. It is an extended decline followed by a rally of at least 20% that is sustained over at least 2 months. Okay? That's what it is. Now, you can argue it all you want, but it doesn't make you any more smart, guys. Everybody wants to be smarter. Warren Buffett says, again, it's not, trading isn't this thing where you have to have 180 IQ, right? Anybody can learn to trade well, but you have to get through all that emotional stuff that you're carrying along. Okay. So, just kind of, looking at that, right? Oh man. So yeah, it doesn't look like Fibo is able to join back in, guys. He's been trying. I apologize for that. We'll see if we can figure it out so it doesn't happen next time. But technology, man, technology, right? So hopefully you guys got a lot out of what he talked about there. Like he said, check out Crown Crypto there. They did record that show this morning, and he said the Crown will probably be uploading it tonight, this evening sometime. Okay. So Fibo says he had a great show up to this point. Tell everybody bye for him. So I'm telling you guys that he is saying goodbye, and he will see you next time. He says it's just not connecting for some reason. Okay. But anyway, so yeah. So, again, here we sit with Ethereum. With this here, if you're going to be bearish, you have to say, okay, well, this is what has to happen for me to be bearish. Not like, oh, I'm being bearish because I still think it's going down lower, even though it's rallied all this time over all this length of time and height, right? If you're doing that, guys, again, it's not the proper way to do it. If you look and you go, well, Bitcoin, it's silly to say 50,000 because that's further than it going to 12,000. If you think that is a legitimate way to analyze a chart, you are seriously mistaken. You have to go back and really learn, guys. That means nothing. The fact that we've come down 80 somewhat percent, right? And then we've rallied now. That's what you're looking at. 20, it's just a few more percent really to get from the 15 low to the 12 low. That's the way you look at it. Not, oh my gosh, you're silly for saying 50,000 from here because to get to 12,000, it's less. You see what I'm saying, guys? It doesn't take a lot of mental gymnastics to really understand that, okay, or it takes a lot of mental gymnastics to go that route. You see what I'm saying? It doesn't take a lot to really look at it and go, okay, that doesn't make a whole lot of sense. Okay. So if that's what you're thinking, again, it's silly, right? It doesn't make a whole lot of sense because that isn't how markets work. They don't go, oh, well, which way is closer, so I'm going to go that way, right? So just some things to think about, guys. Again, I'm here to help you out, right? And if I can help you understand where you may be emotionally getting involved with an idea, if I can at least help you to recognize when that may be happening, then it gives you a chance to actually look at things from another perspective, right? And either save you some money or make you some money, right? The goal is just to make sure that we're noting when we're being unrealistic or we're really kind of just on the fringe of what we think may happen, right? Again, there's nothing saying that Bitcoin can't go down to zero. There's nothing saying it can't happen. But when you're trading, you have to look at what's actually happened, what has happened on the chart, what is currently happening, and then what are the probabilities that more fringe thing actually comes to fruition, right? Hank says if Bitcoin starts running, all alts will be left in the dust. Let me see here. Toby, is that Toby there? Yeah, Toby says Solana USDT shows some strength. Do you think the Sol BTC has made a reversal to the upside? I don't know when the last time I looked at that chart is. Let me I guess make a copy here and do that, right? What's today? Today is 04/28. Okay. And then we'll do. Oh, by the way, guys, if you are subscribed to the newsletter, it's been a while. It's been probably 2 months now since we've actually been out. We've been actually working on that along with all the other changes we're doing with the company. That will be restarting soon, the market breakdown. So don't lose hope on that. It is coming again and going to be even better, guys. Again, just trying to figure out how do I offer you the best of what I can with that, right? Make it worth your time to actually take a minute and open it and read it and whatnot. Okay. Let me see here. Here's Sol Bitcoin. This is the weekly chart. What do we got here? Yeah, I mean, it looks like 1, 2, 3, 4, 5 up here. We look like we got 5. Pull back. Almost 50%. Okay. What do we got here? I mean, yeah, it looks like we've got 1, 2, 3, 4, 5 as a leading diagonal. And then, so that's A, and then there's B. And then it looks like 1, 2, 3, 4, 5 is C. And you can note, by the way, importantly, note where we are actually getting support, right? Right, there's resistance, support. So that's important as well. If this is wave 1 here, we'll zoom in a minute. We've pulled back 61.8. You can see we're getting a bullish cross here on the weekly. Got a lot of room to go on the daily after breaking out of oversold there. Let's jump into the daily here. Let's see here. Yeah, it looks like it could be 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So it looks like we've got 5 up. Again, the pullback has been almost 61.8. Looks like an A, a B, and then a C here potentially. Let's see. You're looking in here. It looks like it's only 3 waves there, though. Let's zoom in one more time. And we're going. Meant to get the 4 there. There we go. What do we got here? Huh. Well, I mean, we would have to assume this is a WXY or an ABC at this point. So for me, initially, well, you know, here, look, I can look at this. Let's do this. You've got this nice downtrend here. You can even pull it from this lower part here. Let me see here. We got the impulsive, the volume there, and then the impulsive move up. They pull back, but now we've broken out above it. Generally, I want to see an impulsive breakout above this kind of 4-hour area. Really, just kind of this orange range right here, up there to around 0.0008038. I want to see impulsive breakout above there. If we can get that, I think this kind of says, okay, we're at a 1, 2 here. Yeah, I think this might be like a 1 here. So like a 1 and then an ABC down, A, B, C up, and then, you know, maybe 1, 2, 3, 4, 5 getting us down here for that. So yeah, so I want to see initial breakout, impulsive breakout above that level there if we can. Again, I'm going to say this looks like potentially a 1, 2 like this. And then that would give us wave 3 locally here. Whoops, I put it the wrong place over here. Up here around 0.09734, which is minimum expected. Wave 5 up there at 0.0102777. Where does that get us? All right, it makes sense. We'll look at this area right here. Let's see that as a decent area of support there coming in. But ultimately, that's off that right there. Let me kind of zoom out a bit here. Let me zoom back out again to the weekly. If we're looking at this larger structure, guys, what we need is a breakout really above this swing high up here. If we're looking at this as a 1, 2 here, this would be the expected wave B. Right up there at 0.0021227, 0.0021227. And so that would be the wave B. So if, again, if you're looking at this as a 1, 2 kind of thing here, then you need to get above that level to get to wave 3, which would be minimum expected 0.0080046. Yeah, there we go. So that's where I'd be looking at on that. As far as that goes, man, I'm not even sure you guys can see it. Let me zoom in here a little bit for you. Yeah, see up here like this. That gives us this 0.00800046. But you have to get around that because that's the wave B. Is this, this red line here. And you absolutely have to get through that because that would then say, okay, well, this, what appears to be 5 waves down is complete. So this A, B, C, so we can't break down any further once you get above that wave B. So yeah, that's what looked there. Hey, Toby, you're welcome, man. But, again, we could still get a lower low on that. We'll have to see how it plays out. Not overly clean there or right here especially. So, locally, we want to see those breakouts leading to, a breakout there. And then eventually, like I said, for the big count, you want to get above that wave B. Until then, what's below wave B, what we have is wave C, could morph into a different wave C, or the whole count could morph. But as long as that wave C holds and we break out above that wave B, then that locks that in as 3 waves down. And again, still no guarantees, but that's about as much guarantee as you can get that, that we're rallying out to a new all-time high after that. That makes sense. Okay. Let me see here. We've got, let me throw up the stock charts here, right? Let me find what I'm looking for here. Let's see here. Where are we at? Dollar futures, NASDAQ. Actually, I was looking for, man, where'd it go? I was actually looking for my E-minis here, my S&P E-minis on here. Well, fine. We'll just go ahead and throw it together then real quick here, and we'll go, minis, and we'll throw this on. Again, why the E-minis? Because it's the most traded, it's the most liquid futures product in the world. So if you guys don't understand the importance of liquidity, I'm not sure there's really anything I can do to help you out there, right? Look at this. Look at this weekly shot here, guys. Look at this right here, right? Resistance right there. So again, as always, that mid-August swing high from 2022 on all the charts, it's like, seems to be basically that's the resistance level. That's what we have to get about, right? Again, for me, I think it looks to me like 1, 2, 3, 4, 5 gives us A, B. 1, 2, 3, 4, 5 gives us C. Here, potentially a 1, 2, 3, 4, 5 as a leading diagonal, but could also be a 1, 2, 1, 2 here. So we'll have to see how this plays out. But if we're breaking out above that 43.27.5, that should lock in 3 waves down. Now, that doesn't mean you can't, again, get 3 waves up and then 5 waves down as like a WXY. But, that type of thing is less likely. It's more rare than an ABC, right? So you want to keep that in mind when you're looking at that. Also, doesn't mean you can't have ABC down and then ABC up and then 5 down as a flat. I mean, that would kill traders, right? Get this rally up. They're like, yay, look, bulls are like, yay, look, we're going to break out. And then they get trapped and comes back down. And bears are like, see, I told you. And then it gets down here and breaks down just below. Bears get trapped and goes up. And everybody's like, God, dog it. I'm sure Hank's got an AI-generated image for that. If not, I'm sure he's on his way to make it right now. But, again, we could have that as a flat here. We could also have this, if this is 3 and this is 4, this could be a triangle. We could have ABC down, ABC up, ABC down, ABC up, ABC down. You go A, B, C, D, E, contracting triangle, before you get the 5th wave thrust, right? So there's a lot on that, guys, to be paying attention to, right? Again, on the hourly, as much as we have this resistance here, also look on the hourly here. Look at what we're doing right here, I guess, right? Look how we got this support, right? This resistance, support, resistance, resistance, support all the way across, right? We're range bound right here. Again, and here we go thrusting up. Look at the last 2 days. Very good movement up here. We'll look for that breakout higher, right? So again, everybody's going to be really bearish, and everybody's going to have their the economy is doing this, so the market has to tank. But again, guys, remember, the market and the economy are not the same thing. And so you can see movement in the markets that don't make sense with what you think is happening in the economy. That's because the things we look at for the economy, they don't have to happen right then. They could have extended lead times. It could take a lot longer. Again, everybody's been talking about this recession we're supposed to be in for a year, almost a year and a half now. It hasn't hit yet, right? Yes, I admit, we've talked about there are things happening that kind of get you out there and go, okay, well, it looks like it should be happening. And usually when these things happen, it does, but it hasn't happened yet. So if you're a trader, why are you worried about the weekly or the yearly chart? Why? You're a trader. Yes, that may come, but that doesn't mean you don't have all this opportunity to trade in the meantime. Look at all this opportunity you missed trading here if that's all you were waiting for, right? By the way, notice this here also looks like this, right? Let's kind of get this out of here. Kind of get the barrier triangle going, right? And normally, when you have this kind of barrier triangle going, again, it's just a pattern, right? And so often it's the height of that on top of, as a pattern target, right? So something like just about like that. Up here, where does that get us as far as the pattern target goes? Man, look at that. That gets us a new all-time high up there around $49.98, $5,000 or 5,000 points. I'm sorry. And if we look at that, well, 5,000 is a round number, right? It's a significant number, right? 5,000 versus 46.79. Does that make sense? So again, quite possibly right here, right? Quite possibly. Looks a lot kind of like the Ethereum move right there, right? So, again, guys, when it comes to macro, stop looking at economic indicators and trying to develop a macro narrative that's going to tell you what the chart's going to do. The news, the macro is already in the chart. How is that? Because, guys, everybody that's doing the hiring and the production and the laying off and all this stuff and the delivery and all this stuff are already making their moves long ahead of time. They're decreasing production, increasing production, laying off people, hiring people, whatever. It's already being done, which is what creates what's happening on the indicator. These people are already making these moves. It's already happening on there. And what does that mean? That means it's already happening in the charts. Because based on their feeling of what's going on in the, in everything, right, in business and everything, first of all, the businesses are going to decide whether to invest more money or not, right? Which goes into other companies, right? Which them coming up or down, right? But additionally, your big players, your hedge fund stuff like that, are going to look at those and decide where they're putting their money. Again, deciding does the company, get a lift or does it get a drop? All this, guys, the macro is already in the charts. If you're trying to figure out a narrative based on some indicators, some macro economic indicators, and you're trying to figure out what is the chart going to do, guess what? The chart already is doing what it's going to do for whatever it is at that point. The question is, can you read it properly? And we're going to get it wrong a lot of times. We're human beings. We're going to get things wrong. Am I blowing your mind yet? Because most people, even professional traders, guys, they tend to look at the chart and go, well, the chart's going to tell us what's going to happen. But really, what they don't recognize they're doing is they're just attributing price action to a news event when it serves them, right? When it helps them understand why price jumped or dropped. But if you look at the studies on that, you'll see that the same thing that they say, oh, okay, that's why it dropped here. Another time, it rallies instead. And sometimes it's merely days apart, right? So obviously, these reasons that we attribute to things happening aren't really what's making the price movement happen. The price movement is already set up in a way that leads into that, okay? And so, I guess my final part on Elliott Wave here is Elliott wave helps give you that understanding. It's this understanding that the markets are not random, right? They don't just happen. That the markets are basically, what is the social mood? What are people in the aggregate feeling? And they show what they're feeling by where they put their money or don't put their money. And that's reflected in the charts. Social mood, charts, and then, the things happen, right? Instead of thinking, okay, charts and then things happen. I'm telling you guys, if you can figure that out, if you can flip that from what you're used to hearing and what most people talk about, you're going to find that you're a lot more successful in trading. But it takes a bit. It's a hard sell for most people. It's a hard bit of understanding. It's this logical thing in your head, right? If you've been to law school and you've taken the LSAT, well, okay, you might be more equipped to jump on it like that, because again, there's a lot of logic in that, right? But for most people, it takes a bit of really trying to understand that to in their head to get the logic to work out correctly. Okay, guys? So yeah, again, things don't look as dire as what the economic indicators are saying, right? That doesn't mean things can't turn down at some point. But if you've been worried for the last year and a half about everything going to dump, then you've missed, depending on the chart, June or November lows and all this money you could have made on the rallies, right? Or more money you could have made, but you were scared every time it pulled back a little bit that it was going to get that big push lower, right? It's not easy, guys. It's not easy to get your emotions out of it. Again, emotions are what make us human beings. It's a good thing. It's just you have to understand them when you get into trading. Otherwise, you're going to make comments. You're going to have understandings that aren't really legitimate because you're not paying attention to the fact that the arguments that you're making are driven out of emotion. At the end of the day, do you want to be right or do you want to be profitable? If you're on social media, you probably want to be right. But hopefully I've convinced you that it's more important to be profitable and to be ready for them changes. Okay, I got to get out of here, guys. It's been a great day with you. Again, apologies from myself and Fibo about him disappearing like that. Please make sure you check out Eric Crown. Again, that's where Fibo did that interview this morning. And so he's going to be on that. That should be released, he said, sometime this evening or this afternoon. Other things, pay attention to social media with us, or if you're in Discord with us, I'll post it in there. But I'm going to have that free educational thing, 52 weeks, one lesson a week for 52 weeks, guys, completely free, not charging you a penny for it. Jump in on it, whether you're a current paid member or not. It'll be a whole bunch of stuff that you probably haven't heard. Other than that, so I'm going to have a new video series coming out with interviews and whatnot with people. The first one is going to be next Tuesday. I'll be interviewing Gary Cardone of Note 40, I think is the company he's with now. But he's got a long and varied history in business. I think he spent a lot of times, if I remember correctly, at the beginning in the oil business here in the Houston area. Remember, him and his brother are from Louisiana, so right down the road. But I hope we can find a lot of really good stuff to talk about there. But we're also going to talk about, Bitcoin and economics and things like that, that I think you guys, if you really want to learn a bit more, will be interested to see. It won't be a live stream. It'll be pre-recorded, and then we'll release it. But I've got a couple of things coming up as well. Don't forget, Scott and I are working on a show to be doing for you guys probably Wednesday mornings. And we'll let you know as soon as that goes as well. So much going on. I hope you guys have an amazing weekend. You trade safe. Remember, the only thing you control in the market is what? It's how much you lose, right? That's it, guys. That is the absolute only thing you have control over. No matter how good you may think your analysis and your skills are, the only thing you absolutely control is how much you lose. So what should that tell you? That should tell you should be spending most of your time learning proper risk management and refining it to lose as little as possible logically, right? Not just to lose as little as possible, but to lose as little as possible in a way that makes sense. All right, got to become comfortable with losing money if you're a trader, but don't be comfortable with just YOLO. There goes 50% in one trade. All right, guys? All right. Hey, I really appreciate you guys being here and checking in. We'll be back next Tuesday, 11 a.m. Central Standard Time. Join us, howtotradetowin.com, soon to be transferring over there to texaswestcapital.com. Would love to have you guys there. Y'all take care. And you know what? Seriously, guys, be kind. I mean, really. Um, you never know who you're being rude to, whether it's online or elsewhere. You never really know what they're dealing with, right? So try and step back. Even if they're rude with you, try and step back. I know it's hard. I'm telling you right now, it's hard. Me too. But let's try and remind ourselves that we never understand what people may be going through at the time. And a lot of times, it could be something like they've lost somebody, or they've lost their job, or, just there's so many things. It's a lot easier to be kind. Pay off on that. I promise your life will be a lot better. Okay. Take care, everybody.